If you don't understand taxes, trust me, taxes are going to understand you. So today's show is Tax Tuesday Live. We're going to talk all about taxes and how people can get out from the burden of taxes and what you need to do to be proactive to reduce your tax bill. Good evening, everybody. I'm Kamari Ellis. I'm an enrolled agent, tax accountant for over 30 plus years. And today we're going to start something new about taxes. So today is Tax Tuesday Live, and we're going to talk to you all about taxes. Y'all know me. A lot of y'all know me. I've been here for quite some time talking about taxes, money, all things economics. But today, what I want to start doing is I want to start talking about taxes in a real meaningful way. Tax season is coming up, and I'm tired of seeing people get run through the coals because they are not proactive with their taxes, and then complain that they're getting run over by their taxes because they haven't been proactive. It's really hard for many people, but I get it. But I'm here to help, and so I've got some questions that some people have asked me on my YouTube channel, and I said, all right, well, one day a week, I'm going to start dedicating a show just to talk about taxes, y'all. Strictly taxes. And of course, I want to make it fun, or at least I'm going to try to make it fun. All right. So check this out.
You are now tuned in to
Tax Tuesday Live with Kamari.
All right. So every Tuesday, we're going to do a Tax Tuesday Live. Ideally, we're going to start these off at 7 p.m., but you never know, it might be 8 p.m. But I'll let you know in advance. I'll schedule them out in advance, and they'll already be out there so you'll know, and you'll be able to get your tax questions answered. And listen, right up front, if you do have tax questions and you want to send them to me, all you got to do is send them over to taxtuesdaylive@gmail.com. Again, taxtuesdaylive@gmail.com. And so I was digging in the archive, and I found a clip that somebody sent me a long time ago. I never got a chance to respond to it, and they asked me what it was about, and if it was indeed true. So let's check this out, y'all.
Her money.
Boom, there you go. She got her receipt. That's the tax write-off.
Okay.
Do you get tax write-offs in porn?
Yeah.
Okay.
So, I mean, I write off, like, you know, when I get clothes, like lingerie. My hair is pretty expensive.
Your
nails.
areola is showing.
Oh my goodness.
Your
You
nipples
didn't
out.
even tell
He
me.
just told me in my ear.
I wasn't looking, so I wouldn't notice.
No, he just told me he was like her nipples out.
Oh my goodness. Okay, sorry. That's what happens, like, when they're so big, it just, like, I don't know. It isn't. Okay. But, yeah, so I could write off, like, you know, flights, hotels, things like that. So.
Boom, and you just got you a tax write-off just now.
Thank
Yeah,
you.
go.
Because you donated to
We-
Change for Change.
And we appreciate you joining us.
Now, let's run this back real quick. And I'm not trying to be fresh, y'all. I promise. Great looking sister. But she said a couple things about taxes. So let's focus in on the taxes and get y'all minds out of the gutter.
Write-off.
Okay.
Do you get tax write-offs in porn?
Yeah.
Okay.
So, I'm.
All right. So a lot of people ask, do you get tax write-offs from porn? Porn, sex work, stripping, anything in sex work is a business, right? So anytime you are doing business, you get the write-off, what the IRS will call an ordinary and necessary expense. The fact that you're doing business and you're looking to generate a profit is showing that you want to make money. The government likes that. The government's job with the IRS is to make sure that you are paying your taxes. So anything that is generate money, i.e. profits, the IRS can go after and tax them. So porn, sex work, stripping, no difference, right? And this is a judgment-free zone. We just want to talk about the facts, y'all. Nothing but the facts. But like she said, there are some things you can write off, all right?
I mean, I write off, like, you know, when I get clothes, like lingerie. My hair is pretty expensive.
Now, I've seen this a lot. Many people think you can write off your clothes just because you are on camera, right? Because you're an entertainer. That is a bit of a gray area. While clearly she's going to be able to write off clothes for her profession, excuse me, y'all, or the lack thereof, the clothes. Here's the thing. Somebody could be telling her to write out clothes, right? Strippers might say, I've got heels, I've got boots, I've got undies and all kinds of stuff. But here's the thing. If the clothes can be used for a personal reason, like for her own personal reason, and not up on the stage to make money, if the IRS decides to audit you, or what they also call examine you, they might say, no. Those things are not allowable. They are not an ordinary and necessary benefit for your business. They're actually for personal use. And as a quick aside, I had an interview, or a conversation with a IRS revenue agent yesterday because they are examining a client of mine. And one of the things that they are examining them for is some of the mills that they have claimed on their taxes. I didn't do the taxes. I didn't advise them. I'm just helping them resolve some of their problems with the IRS. But one of the things that's being contended is if some of these mills that they wrote off are actually indeed business mills or personal mills. And so, again, that can be a little bit tricky. And sometimes people get into these gray areas, again, ordinary and necessary, not needed for your business, where someone might say, oh, I went to the drive-thru one day during my lunchtime and I'm writing this off. And these are real life scenarios, y'all. And then they say, hey, I can write this off. And I'm going to say, I had a meeting with myself on my lunch break at work to discuss my business. That's not how that works. That's a flag on the play. All right. So the IRS would deem that as not necessarily a business expense, but a personal expense. You need a couple things to say when you're having a meal or using, let's say, the clothing or the hair, things like that. It needs to be, deemed qualified for their business. One, you want to document it. And when you document it, here's a little secret. The IRS doesn't really care about your bank statements nor your credit card statements. A lot of times they want to see your actual receipts. And you should document on those receipts what the expenditure was for, the date it was for, and how it's going to benefit your business. And so a lot of times people don't do that. Most people, when they're in business, they don't have a bookkeeping system at all. So they don't have a way to classify and capture, or let me back it up, to capture their receipts and then classify those receipts so they can get at them. And so a lot of times when they have an audit or the IRS says, hey, this looks a little fishy, they don't have a way to prove it. The IRS loves to use a word called substantiation, fancy word, substantiation, meaning you got to have proof in order to say this is a legitimate write-off. All right. So when the young lady talks about, clothing and hair and things like that, if she were ever to be audited, it could be an issue. Now, this young lady's name, again, this is a clip from the Breakfast Club from many, many years ago. Like I said, somebody gave it to me, asked me to review it a long, long time ago. Her name is Leighton Bennett. I'm not familiar with her work, but, I'll check it out and see if it's really tax related, y'all. I'll see if it's tax related, y'all. All right. So Don Johnson's in the building. What's up, bro? How you doing? How are you? All right. How you been? All right. So, yeah, we're going to start a tax segment on Tuesdays because, again, every year during tax season, I get people complaining about taxes and they haven't done the due diligence. They haven't done the knowledge to make sure to stay out of trouble with the IRS. Anything for overpaying, getting IRS audits, things like that. I can't tell you how many people who were in a relationship and then they broke up and then they had problems with the kids and so many things. And sadly, it's part of life, but we're going to start talking about it more. All right. So let's finish this.
Expensive.
Your areola is showing.
Oh my goodness.
Your nipple
You
was
didn't
out.
even tell me.
He just told me in my ear.
I wasn't looking, so I wouldn't notice.
No, he just told me he was like her nipples out.
Oh my goodness. Okay, sorry. That's what happens. Like when they're so big, it just like, I don't know. It doesn't. Okay, but yeah. So I could write off like flights, hotels, things like that. So
Boom, and you just got you a tax write-off just now.
Thank
Yeah,
you.
you're good.
You donated to Change for Change.
And we appreciate you joining us.
Now, she talked about the flights, right? When you're flying or traveling for business, that is indeed a legitimate business reason. However, people also fly for personal reasons. So when you're doing this, by the way, that audit I was talking about that I'm dealing with for a client earlier, meals are being targeted, travel is being targeted, right? So they want to see how the person is doing what they did when they traveled. Did they take trains, planes, or automobiles? Do they have receipts for it? If so, were they documented? And so those are all the things I'm going to have to contend with when dealing with this audit for my client. And she asked for that specifically. So it's going to be really, really interesting. All right. So do me a favor, as we're watching this, make sure y'all like, comment, share with anybody who is having tax problems or might be having tax problems. All right. It's totally free. Just want to make sure I'm giving back to the community overall so folks can stay out of trouble with taxes. All right. Now, I've seen many of people say they can write certain things off because somebody told them they could do it. Their sisters, brothers, cousin told them they could do it and they could write it off. But here's the thing. You can write things off like a couple years ago, Ray was talking about getting a G-Wagon, getting a good old G-Wagon from good old Mercedes-Benz. But the question is, if you were paying attention earlier, I was talking about ordinary and necessary. So if you have a business that's just, I don't know, pick a business. Let's say the tax business. I'm in the tax business. And I say, I'm going to get a G-Wagon. What's the ordinary and necessary reason for that? Why is it, whenever we say ordinary and necessary, again, these are IRS buzzwords that get used often. What's the ordinary reason for you to have a Mercedes-Benz? What is the necessary reason or the necessary, well, let me back up. Ordinary speaks to the overall industry that you're in, right? Why would somebody need a Benz to drive around when they're doing taxes in their office or doing strategy and consultations in their office, right? Is it truly necessary for that business? Let's say you got a daycare, right? Do you really need a G-Wagon to run a daycare? Are you going to transport the babies in a G-Wagon? Let the babies mess with that fine leather seats in a G-Wagon? Is that ordinary for the industry? Is it really necessary for the business? That's something they might say, all right, it's not really ordinary nor necessary for the business, but you just wanted it, and that's fine. But we are not going to allow you to write this off. So again, a tax pro might say, excuse me, let me back up, a tax preparer, because there's a difference between a tax preparer and a tax professional. But someone might say, hey, you can write this off from your taxes and you can make some money. You can get some money back from the IRS. But they never talk about what happens if the IRS says, no, you can't do it. And listen, I'm not going to lie to y'all, and I'm not trying to fearmonger y'all, because we're seeing what's going on with the government. Government was just shut down. A lot of employees of the IRS were laid off, furloughed. So the IRS forces have been attacked as well. Not really going to get too much in politics on this show, but people really hate the IRS. However, when Americans, taxpaying Americans, get in trouble with the IRS and they have these problems, they're kind of in the lurch and they don't have much to go off on, right? But tax preparer may say, write this G-Wagon off. And then they never talk to you about what's the likelihood of you getting an audit. What do you do when you get an audit or an examination? The IRS used the term audit and examination interchangeably, all right? So you want to think about those things, and you want to, I don't want to say stay away and be fearful, right? Because you should take all the deductions that are legally owed to you, right? That you can take, but you shouldn't necessarily follow social media advice just because everybody else is doing it. All right, living the dream for my ancestors. 404. All right, I like that. All right. Hey, Lorraine, how you doing? Happy Tuesday. All right. No ordinary reason as a tax pro. Maybe an actor for entertainment act. Maybe. Now, Lorraine, are you a tax pro? If so, I didn't know that. All right. Now, I want to show y'all another clip because I know some of y'all are going to say, some of y'all being Don Johnson, Kamari just showed that porno star just to be salacious. No, it's a real life scenario when somebody actually asked me to review it. Now, somebody sent me this clip as well. Now, this talks about the inner workings of the IRS. And I don't really people think that this happens or how the IRS actually functions. But here, let's check this out, y'all. I don't know why. Technical difficulties. It just worked for me. Now it's not. Flag on the play. Now, this sister was talking about how the IRS does not really help people with knowing the credits and deductions and what they should be doing. They don't help them. They don't give as much help as they would like to. So let's see. Let's try this one more time.
Welcome back to another episode of the things I did not like working for the IRS. So, one of my biggest pet peeves working for the IRS is the fact that I had acquired all this knowledge. I had information that was necessary for the taxpayer to know, but because the IRS believes that it is the taxpayer's responsibility to know the credits they are entitled to, they are supposed to know how to accurately file their tax returns. I am not to just give out this information, right? They will they would tell us to refer them to tax law. And that infuriated me because I had the qualifications to tell them and to tell them how to do this. And if our goal is to make sure taxes are accurately filed, why am I transferring them to another department, right? So I had this information and I had the ability in some cases to look at a tax return, right? Let's say, for instance, someone called and after they filed the tax return, they had a tax liability. So they were called to, make some payment arrangements. So I'm looking through their tax returns and I see that there were credits that they were entitled to, but they didn't claim. I'm not allowed to tell them that.
She's not lying. She's not allowed to tell them that.
That would infuriate me. Or let's say, okay, after filing their tax returns, they ended up with a tax increase, which resulted in a tax liability. Now, if I were to give them a first-time abatement, that would wipe away most of their...
Now, first-time abatement, FTA, what does that stand for? So sometimes when you get in trouble with the IRS and you get penalties and you get interest, sometimes, not always, but sometimes you are eligible to get or request what's called an FTA, a first-time tax abatement. Now, to qualify for that, you basically have to have a clean slate and have not been in trouble with the IRS or lapsed in your filings with the IRS over the last 3 years. That is something a lot of people can call and request for, and they don't realize it. So just keep that in mind, y'all.
To accurately file their tax returns, I am not to just give out this information, right? They will they would tell us to refer them to tax law. And that infuriated me because I had the qualifications to tell them and to tell them how to do this. And if our goal is to make sure taxes are accurately filed, why am I transferring them to another department, right? So I had this information and I had the ability in some cases to look at a tax return, right? Let's say, for instance, someone called and after they filed the tax return, they had a tax liability. So they were called to, make some payment arrangements. So I'm looking through their tax returns and I see that there were credits that they were entitled to, but they didn't claim. I'm not allowed to tell them that. That would infuriate me. Or let's say, okay, after filing their tax returns, they ended up with a tax increase, which resulted in a tax liability. Now, if I were to give them a first-time abatement, that would wipe away most of their tax debt. And if they don't ask me, I can't offer it to them. And that would infuriate me, because now you tell us that the goal is to make sure that the taxpayer doesn't have to call back over the same issue. And I have within my power and within my right to make these adjustments. But you tell me if they don't ask you, don't offer it to them. I believe that's being disingenuous. So the taxpayer would have to ask me.
I would agree with her. It is disingenuous, but that is how government works, sadly.
For an abatement. But the problem is, not many people know that that's something that they're entitled to. Some people.
Now, there's another reason, just being full transparency, there's another reason why the IRS does not advise their employees to do some of these things, because then it will potentially create a risk. And the risk would be that somebody gives wrong advice, bad advice, and then somebody sues or takes them to court. Now, this might seem crazy, and I say this to people all the time. Not everybody that works at the IRS actually understands taxes, knows and understands taxes above the law and actually technicality and actual application. So everything that, let's see, somebody on the phone might tell you, and I've had this happen to me, isn't always right. Also, the IRS will actually publish things in certain publications that do not stand up in court. Sadly, it's weird, but it is true. If it's not law or some of the other things that have higher credits or authority, then it will not be followed or advised.
I don't even know what an abatement is. So with that, I'm like, man, I would be so pissed off, and I'm just waiting. They want you to wait for them to ask you, but also they want you to control the conversation, and also they want you to keep the call under 3 minutes. So while I'm sitting here trying to abide by all the guidelines, and they never get around to asking, what can you do for me? And then had they asked that, I would say, I'm glad that you asked. Here's what I can do today. But most people, they don't know that that's something that they can ask for. So that was something that really pissed me off about the IRS. And I would just get off the phone upset. And sometimes when I did actually offer it to them and I process it, right, they thinking they're all good, only for the manager, because they monitor every call, right? And if they see or if they hear that the taxpayer didn't ask for it and you offered it and you changed it and you processed the return to make the adjustment, they'll reverse it. So now the taxpayer thinking that,
So that's real. And the manager over top of, let's say, a customer service person or anybody else, the manager has the power to reverse some of the decisions that the employee might have made. It doesn't matter that they made it, they might reverse it. Because again, the IRS is the chief tax compliance agency in the land. Their job is to collect money, period, point blank.
That you didn't do the right thing or you didn't do what you said you were going to do. So, that pissed me off. But stay tuned. I'll tell you the next thing I hated about working for the IRS.
And so when I saw this, I was like, wow, that's what I've experienced over these 30 years of doing taxes and advising on taxes and helping people clear their IRS debt. I have seen that happen. I've seen people make decisions, or IRS employees make decisions that their managers overturned. And it left people in a lurch, and nobody really cared, but it is what it is, right? So, but that is part of the reason why I am like taking up the mantle and the baton to tell people to be really vigilant about their taxes, because taxes are your biggest threat to wealth creation. Let's say you make $100. All right. Your average federal tax rate in this land is anywhere from 20 to 25%. So out of that $100, you already got to give away to Uncle Sam or Uncle Scam $20. So now you're left with $80, right? If you got state taxes, I know in Pennsylvania, the state tax rate is 3.07%. So now off of that 80 that we had left, you got to take away another, let's say $3 just for even rounding. All right. So you had roughly $80. So now you got 78 or $77 left. That goes away real quick. Now, if you're in a city like Philadelphia, which I am, then that's another almost 4%. So off of that $100, you now have to pay another $4 to $5. So now that 78 just dwindled down to 73 or 72. And so that money, really disappears really, really quick, especially if you're not paying attention to it. So it behooves you to make sure you take taxes very, very seriously and study them. I know most people think taxes are boring. And I get it. Depreciation this, write off that, statute this. I get it. Most people don't like it. However, when we're talking about your money, because when you add up 20% one year, 20% the next, and let's say 20% over a 10-year period, that's 200%. So, you got to think about that in its totality. So you don't just give away all your hard-earned dollars. Now, I'm never going to say that taxes aren't helpful or useful. I know a lot of y'all probably will, but I also appreciate public schools, firefighters, police officers, hospital workers sometimes, and the like, hurricane watchers, things like that, all of those services that the government does provide for citizens. But there is times when they do some things that are not so, let's say, worthwhile or helpful to U.S. citizens also. And so, you gotta, when you're looking at it objectively, you gotta take the good with the bad. Is there a lot of lack of oversight or overspending? I would say absolutely. Hell yeah. However, there's some good things that happen too. But again, nobody really wants to talk about that. Now, I have a question for you. Do you guys have any tax questions? Now, tonight is our first night. I'm not expecting many. I'll just be taking the tax questions that I have because I got a couple on some of my YouTube videos. And again, these YouTube videos are old, but there's a couple of YouTube videos that I continuously get questions about. And so I wanted to go over those. But if you guys have any questions concerning tax, go ahead and throw them in the comments. Feel free. I will answer them to the best of my ability right here on the spot. So feel free to answer any questions. Also, feel free to share this out with anybody, again, who might have any tax questions or tax problems as well. So I know I got a couple questions. I'm just going to pull these up on the back end of my YouTube studio. And we'll just go right through that. Give me 1 second, y'all. 1 second. So I'm going to share this right here. Alrighty. Let me blow this up a little bit more. Make sure people can see it. Now, recently I did a video called Invest, Borrow, Die. And so Saturn Crush asked, the one thing that never talked about is you have to pay the money back. Houseway. So I know this isn't really a question, it's more of a statement, but I wanted to address it. Sometimes when you do get a refund, you may have to pay the money back sometimes. And that goes into the whole thing when you get audited as well. You might have gotten a refund. You might have had some write-offs that are what's called disallowed. And IRS is like, no, you got to get that back, buddy. No way, Jose, you have to give that back. And so that's something that a lot of people have to think about or should think about. I think about it all the time. Right? Now, I got another statement, all right? The primary incentive for using this strategy is when you die, your heirs get the assets a step-up basis. Now, this person is pretty savvy because step-up in basis is actually a real thing. It's mark-to-market effective the day you die. That is very true. And so let's say you had a piece of property on, let's say, January 1st, your family owner died. January 1st, the property was worth $250,000. Okay, so when we look at, let's say, selling that property and you sell it for $240,000, well, you get to write off a loss because you lost $10,000 because your step up in basis says you paid $250,000 on this piece of property, on that asset. So that is something that is really, really true. And that's the great big premise on invest, borrow, die. Invest, borrow, die, y'all. All right. Now, as the money's borrowed, the money's still owed. It's owed on the loan, has to be repaid, right? So you have to be careful of the interest rates on your loans and your overall debt load in general. So a lot of times people do not think about that. All right, that's not tax related. All right, now Don, I wanted to get back to you on this, but that again, that's not tax related. It's kind of tax related, but not tax related. All right, there was a couple other tax. Let me see if I can find them. There was a couple other tax. Let me close this out. There's a couple other tax questions that I found. Let me look at this. And now I blew up the screen. Super duper big. All right, and I see there's a question there. So let me get back to that. Let me get back to that. 1 second. So, question for y'all. How do y'all feel when it comes to taxes? Do you feel you're prepared? Do you feel like you understand them? Go ahead and throw that in the chat for me. Because a lot of times when I get some of these questions, I kind of get sometimes the same questions over and over again. But again, I'm always wondering, are people really paying attention? Let's see. Now that's not. Let's see. All right. I'll come back to this. I will come back to this. All right. So, Lorraine, in your previous life, you were a tax professional. All right. I did not know that. So why did you stop? Happy Thanksgiving to everybody as well. What up, Joel? How you doing? All right. Now let me go to this because I know I saw a question. Because I have this one video on this YouTube channel where it keeps going. It won't stop. I don't know. I think I might have like 80,000 views or something like that. It's like my most viewed. It's my most viewed YouTube video ever. And I find that very, very interesting. All right. So, all right, taxes. How much should an independent contractor pay in taxes? I did a video on this a while ago, years ago, back in 2018. And people still comment on it. 284 comments on it. And so this guy was being kind of snarky. He said, what are tax breaks? What, why, when, how, it's 1099, so EA or CPA or EA. So he was trying to be smart. Sometimes people love to, I guess, bust my chops in the comment section. This guy says, Tone Loke, I didn't know you did finance in addition to Sing Wild thing. I mean, that's actually kind of funny. I'm not mad at that one. I'm not mad at that one at all. Let's see. I want to see if I can find it. There was, I saw some folks had asked. Now I can't find it. All right, here's one. As a carrier who uses my vehicle, do I send on the gross or figure out my mileage first? So that's kind of a rough answer, a rough question. So as a carrier, let's break it down. Who uses my vehicle? Do I send on the gross, or I guess she's saying he or she is saying spend on the gross. All right. So when you're using your vehicle and operating for a carrier service or any business that you're working in, you absolutely get the write-off mileage. Now, you need to do a couple things. You want to make sure you are tracking your mileage. Why? Because one of the things the IRS does when they see somebody using mileage as a write-off and they're going to audit them, one of the things they will ask you for is a mileage log. They want to know, were these business miles, were these commuter miles, were these personal miles? And it does get a little bit tricky. I know a lot of you about that. However, if you have good books and you're able to back it up, if the IRS does decide to audit you, you're pretty Teflon, right? You're pretty insulated. All right. So you definitely want to track it. There are apps out there like a Mileage IQ. There are mileage books or logs, like where you actually write them down. My dad was notorious for that back in the day. He would write down everywhere that he went to make sure he got the maximum amount of deductions he could for using his vehicle in his business. So that's just something you want to think about. Definitely something you want to think about. Let's see. Okay, here it is. I found it. Let's go back to it. I had the wrong filter on. So here it says, if you end up overpaying them, will they give you your money back? That's a stupid question. I don't think it's a stupid question at all because people don't understand it. All right, and here's another question. I'll come back and go through these each one by one. Again, if someone wanted to be an independent contractor that required use of your vehicle, when would you suggest they start using the business auto deduction? Is that beginner friendly? So that was 3 months ago. I didn't realize that even came out now. If you remember earlier on, I was just kind of reading the same kind of comment. That was from years ago. One was from 2 years ago. This one's from 3 months ago. All right. So just keep that in mind. So this one is from Justin. Thank you for the comments, sir. I appreciate that. Thank you for the watch as well. So again, if you end up overpaying them being IRS, will they give you your money back? Stupid question. So again, it's not a stupid question. It's a good question. So anytime that there is a refund, most times it is due to an overpayment of taxes. Some people say, how do you get a big refund? Well, normally you have to pay something into the system first. Now, during tax season, when everybody's getting their big fat refunds and they're going shopping, they get new cars, they're getting new furniture, they're going on vacations, a lot of times that's because they got some credits as well as paid money into the system, whether it's earned income credit, child care, a qualifying child deduction or credit. All of those things will help to get people, one, either reduce their tax liability or help them get a refund, and that will be sent to them that way. So that was one question. All right. Now, the next one for Rohar is, if someone wanted to be an independent contractor that required use of your vehicle, when would you suggest they start using the business auto deduction? Is that beginner friendly? So answer question one, immediately. So yes, you should start using your deduction immediately. And this is one of the things I'm always talking to my audience about. being proactive with taxes. And you don't be proactive with taxes by waiting until tax season. Start now. Start today. And so, again, you should definitely claim that deduction because it is legitimate. It is normal and necessary. If you are independent contractor, that is a courier or Uber driver, some other kind of gig worker that uses your car, it is absolutely legitimate for you to use. All right. Now, again, I would say you should get one of these apps. Mileage IQ, the QuickBooks app also allows you to do this as well, to track your mileage. And then you can track it, and then you can come back and categorize it. You can categorize it as if it's a business trip, if it's a personal trip, or if it's a commuter trip. This will be really, really important if you were ever audited to show that, hey, I've been creating copious notes, right? Not just one of the bill every day, not every day, every other day, what I feel like it, but copious, right? I am diligent about keeping good notes to keep track of what's going on in my business and the use of my vehicle and my business. So is it beginner friendly? I would say yes, because again, it's something you can just put on your phone, let it run. There is a fee for it. None of them are paying me advertising dollars, but I already gave you two that does it. And again, you could also use a mileage log to track. And again, another method many people will use is oil changes. They will track their oil changes because usually the receipts on the oil change has the mileage, has the odometer reading on that. And so they might use that as well. Also, another thing you should do as well is record your odometer reading at the beginning of the year. And then you can look at it at the end of the year, and then you can see where you were going to and fro. Okay. So, and I believe I answered most of these questions. All right, here's another one. Again, people love to make fun of me, my voice. Some of the folks that don't look like me love to kind of pick on me as well. And this is the same guy who says, I'm in Texas. Get your words off the internet. Let me tell you what I know. $300 for an LLC. I would say they're overpaying for an LLC, but that's a whole other thing. Biden wants a BOI. If y'all remember that old debacle, the BOI form, they wanted the beneficiary ownership or beneficiary ownership interest forms, short of change under Trump. You are a blowhard. I don't know if you wanted to call me a blowhard or a blowhard. You look for scams out there after making LLC very important. I don't even know what that means. I have no idea what this, I have no idea what this guy is talking about. I call BS. But know your tax. Know your tax for sure. I don't know this dude, but as a driver at 61, wow, it's $3,000 a month. All right, so he had all this time to kind of lambast me and talk about it, but he's kind of off his rocker, in my opinion. But it is what it is, y'all. And when you put yourself out in the public, you kind of take the good with the bad. And this guy doesn't know me from a can of paint. So I don't really care. What up, Jarrell? How's the baby doing? How's parenthood doing? What up, Nicole? Yes, $300 for LLC is a lot. But here's the thing. A lot of people are programmed to think they need an LLC to start a business. And I'm not saying you don't need an LLC, but a lot of times you do, and you don't need an LLC. The question is, do you know? Have you paid for a consult to figure out whether you do need an LLC or don't need an LLC? I will tell you this for certain. Most people that file LLCs waste their money because the LLC is for legal liability protection. And there are certain things you need to do in order to keep that LLC in good standing and good compliance to make sure if you were ever sued that they don't sue you behind off and they don't do what's called pierce the corporate veil that you have to do. And one of those things is not to commingle funds. And almost everybody I know, individuals that has an LLC, co-mingles funds. Well, tell me how that works. And there's plenty of case law to back this up. Plenty of case law to back this up. I'm not just pulling this out. My culo, y'all. All right, Lorraine says, do not commingle funds. No, it is not a good thing. Nicole says, do I need an LLC? Maybe. I don't know. So technically, accountants are not supposed to give legal advice. Right? Accountants are not supposed to give legal advice. Guess who's supposed to give legal advice? Lawyers, attorneys. They're supposed to give legal advice, y'all. Now, just so happens I talk to a lot, so I get to kind of pick their brains in a professional setting. I'm not picking their brains because they're being paid. I actually hate the term "pick your brain," but a lot of times people think they need an LLC and they don't. Now, again, sometimes they do. Sometimes they do. If you are worried about losing your personal assets and you're going into business, it is something you should at least think about. If you're grinding from the mud and you have absolutely nothing, again, it should be something you should think about, but you might want to think twice about spending, let's say in the state of Pennsylvania, you have to pay $125 for an LLC from the state of PA or the state secretary, not $300. I don't know what they got going on in Texas. All right. But you want to do certain things when you do it. All right. And having LLC does not mean you do not have insurance. All right. Two different things. Two totally different things. All right. Nicole says she did get an LLC. And it's funny, Nicole, I was thinking about you today. I was at the Reading terminal and one of the vendors has this lovely honey display. And I was like, I wonder if Nicole knows the folks and are in line to do supply or offer supply and maybe, get your honey in there. All right. So anybody have any questions about taxes? Again, we're starting in November, y'all. I want a campaign crusade to make sure more people are ready to deal with their tax liability this year. So there's no surprises. Again, you cannot wait till tax season to get the best tax outcome. It just doesn't work that way. The best tax outcomes come before December 31st. Again, right now, December 31st, 2025. You have to make that change now. There's a couple of things you can do after the 31st, but they're few and far in between. They usually don't have any power. All right, but I'll be talking about this more often. I'll be talking about this at least every Tuesday. All right, every Tuesday is Tax Tuesday. Every Tuesday is Tax Tuesday Live. And so much so I'm going to talk about this. I even created a community just to talk about tax to my side hustlers, my small business owners, and my real estate professionals. And again, if you just go to taxtuesdaylive.com, you will see the community that I'm creating there. I'm going to have courses there. I'm going to have office hours there. So you can go on over there and see what's cooking over there. But we're going to keep doing this. And I'm not going to just do it once a week. I'm going to be doing more of this. You're going to see more of me talking about this because to me, it makes absolutely no sense that people give all their money to Uncle Sam, and they don't have to. And you have power. And all it takes is a little planning. Now, either you're going to be lazy, and then you're going to get what you're going to get, and you're going to get what Uncle Sam wants you to get, or makes you pay, or you're going to take action and be proactive and make things happen. And you don't got to do it with me. Do it with somebody. All right? Do it with somebody. Just make it happen. All right, Jarrell says, my son good. Sleep at the moment. All right. I won't jinx you. Thanks for asking. All right. It's co-mingling, mixing personal funds with business. Yes, that is co-mingling. That is co-mingling. And I know, Jarrell, you watched that last video I talked about with LLC mess as well. And so that's what I'm talking about, or that's one of the things I am talking about. All right, here's another question. All right, Yo Kamari, do I have to pay taxes? Only if I do the drip method with my dividends. All right, so there's some times when you have to pay dividends. Dividends, excuse me, let me back up. There are times when you have to pay taxes due to dividends. All right. Now, dividends are taxable. Now, how much dividends? I don't know what you're getting. If you're getting something substantial, a couple $100, yeah, you're going to have to pay tax on that, but it comes into play with all of your other income as well. So maybe your W-2 income, your interest income, because that's something else you have to pay tax on. If you have a business, if you have a pension, if you do some other kind of side work, if you have rental property, if you have royalty, money from royalties, books or oil and gas drilling and things like that. Yep, you got to think about that. All right, Lorraine says, best time to plan for taxes is January 2nd of the tax year. So what Lorraine is saying, the tax year, right? So tax season is a year in advance. So in 2026, we'll be done with the 2025 tax year. All right. But I would say the best time to deal with that, to begin that, would have been working with it in turning 25, not in 2026. I think that's what you meant now. Right. January 2nd of the year. So I might be mixing it up a little bit for you. But when we get to January of 2026, we're working in the tax year, the 2025 tax year. But yes, I would agree. January 2nd of 2025 would have been the best time to start working on taxes because, again, things take time. For example, let's say you want to fully fund your IRA. And for this example, everybody's eligible because guess what? Everybody's not eligible to get a write-off when you put money into the IRA, especially if you've already got a 401k or a pension plan. So you got to be careful with that. But if you've got an IRA and you say, all right, it's a new year, it's a new me, I want to fully fund my IRA because I want to be prepared for retirement and I want to invest and I want to make sure that when I get older, my children are not burdened by me because I'll have to move in with them because I don't have any means, any money, any investments to take care of myself when my body says it's time for me to stop working. Because a lot of times people do not have the means and they don't even think about this. They don't have the means to say when they go into retirement. Their body tells them when they're going to go into retirement. And so that's why it's important that you want to not live above your means. You want to live below your means. And you want to put money aside in tax advantage accounts. So when the day comes, hopefully, and I ain't wishing no ill on nobody, but when the day comes, you are prepared and you are well situated to continue to live the life you want to live. Because guess what? The electric bill is not going to stop coming just because your body says it doesn't want to work anymore. The gas bill's not going away. The water bill's not going away. Now the cable bill, you can get rid of cable. Plus cable sucks anyway. But you've got some things you can do, but most times not so much. But again, if you're planning the beginning of the year to fully fund your IRA, you're going to say, all right, I want to take $1,000 a month and I'm going to systematically put $500 in it every time I get paid, and I get paid twice a month. But I'm going to do that religiously. That's one form of tax planning. That's something that you can do. Now, your number may differ, right? Don't get caught up in the number. I'm just talking about being deliberate and intentional and methodical about investing into your IRA. That's a tax strategy you can start at the beginning of the year. $500 every time you get paid, roughly will equal $6,000 a year, roughly. Right? Yes, okay. Yes, Lorraine, we are on the same page. Tax year 2025 planning began on January 2nd, really January 1st, but I feel you. You got a day off for the holiday. You got to recuperate from the New Year's Eve parties, and you had some fun, and you need some sleep. You got to eat your black eyed peas for good luck and money. I forget what is it, black eyed peas and collard greens and your yams. I forget what they all are, but yeah, it began on January 2nd, 2025. That's when it is. Best time to tax plan. All right, Loran said, really, you should start planning for the year a few months before the year begins. Yes, hallelujah, yes. Yes. So that's why I'm talking to you now. It's November 2025. I want you all to be ready to go into 2026 confident and prepared to deal with your tax consequences or benefits because you created them. You created them. Yes, and the lima beans. I don't really like lima beans. That's why I said black eyed peas. Absolutely, absolutely, absolutely. All right. So again, help me share this out. Going over to Tax Tuesday Live, the YouTube channel, and subscribe. All right. If anybody wants to send me a tip, feel free. The Cash App is $. I don't know why it doesn't say $. It says S. $, the finance rebel. $, the finance rebel. Let me see if I can change that. That's not good. That's not good. Let's see if I can fix that. All right, there we go. There we go. Let's see. All right. Cash App, $, the finance rebel. You know, if you want to send me a couple of dollars so I can get a cup of coffee, if you're just watching it and you appreciate the content, it's all good. And if you want to join the community, going over to Tax Tuesday Live, Tax Tuesday Live, that will take you over to my new school account where we are building a community for people who are serious about taking control of their taxes so they don't let Uncle Sam just take all their money and you have absolutely no control over it because you do have control over it. So keep that in mind. So today we talked about SWs or sex workers taking control of their taxes and what they can do to do that and what things they should not do or what, you know, some of the things that are floating around out here on these social media streets. And then we also talked about what the IRS will and will not do. And again, the IRS will basically only take your taxes, tax money, your hard-earned money. They really are not in the business of giving you advice. They're really not in the business of helping people out. That's not what they're going to do. So you got to arm yourself. You got to get prepared, y'all. And so make sure you are talking to qualified people, doing qualified research, and not taking advice on these social media streets. All right. So I'm going to be back throughout the week. But remember, every Tuesday will be Tax Tuesday Live right here. I'm working out the time. I'm thinking 7-ish or 8. What do y'all think? Let me know in the chat what I should do this. I want to make sure I can do it on a pretty decent, consistent basis, is to make sure my clients, you know, they like to control my life. So I got to make sure I can get everything done. But again, I appreciate you all here chiming in, comments. Be sure to send this out to anybody that needs help, and I'll be back next time. That's the wrong drop, y'all. My bad.
You are now tuned in to
People don't forget to join Kamari every Tuesday for Tax Tuesday Live.
There you go.